You'll be shocked by how efficient the US system is. However, this isn't to say that the US is all good. Realistically, the efficiency of the United States economy has been contested for a long time. However, if you stick until the end, I'll tell you exactly how efficient the US economy is and why realistically the doom and gloom for the US has been overstated. Hello and welcome back to Traveling Reports. Today we're going over the US economy and how in a lot of cases people think that the US economy is somehow not productive or somehow is only productive because of the dollar. If you look at the most productive economies by GDP per hour worked, even in PPP terms, either way, the US is at the very top. And why is this? Well, it's because the US does not really need workers to be productive. It's not about workers. They could realistically get rid of all of the workers tomorrow, and the US economy would still be worth trillions. Still would be larger in nominal terms than China, because at the end of the day, what you get with the US is a very interesting perspective of the domestic economy, and the financial industry are realistically the largest share of GDP. And so GDP is largely dictated by consumption, and particularly the consumption of the top 10%. The bottom 60% of Americans do 3 to 5% of spending and the consumption. And so realistically, what the US has shown is mass inequality is largely a motivator for growth. It is largely a way to grow. And their capital markets are so deep that realistically, a regulatory shock or giant issue with the US economy would drag down every other economy more so. And we've seen this in 2008. This is when the de-dollarization efforts were the highest, because they knew that growing based on the US meant growing with risk. And people don't realize is that had they left the US system, they would grow slower. I would say it would be safer growth, especially from what we can see with bubbles in AI, with what we can see with bubbles in tech companies. And I do believe that the US is largely overextended in its financial and fiscal capacity, but it still doesn't make up for the fact that largely the US still has massive fiscal advantages to other economies. 90% of trade is cleared in dollars, which means, let's say you're clearing yuan and you want to buy Saudi Arabian oil. So first it goes to yuan, then it goes to dollars, then it goes to the Saudi Arabian currency, which is, I believe, the rial. So then it goes Saudi Arabian rial to dollars to yuan. So what is the bottom line here? The bottom line is that as time goes on, as people start to realize what dominance means, there isn't a great alternative. And I think that people that think that the yuan somehow has a chance don't realize how many trillions of dollars are cleared every single day by the US economy. This doesn't necessarily mean that the US is making trillions of dollars a day. It means it handles trade at trillions of dollars a day. And realistically, with time ticking on globalization, as I believe that we're becoming more centralized, what you get is a unique point in history where people are more able to get themselves out of poverty, but less able to go up the socioeconomic ladder past that point, past the middle income point. And there's a direct understanding of this, and it has to do with the middle income trap. And the US got out of the middle income trap in the 1800s. A lot of the wealthy economies got out of the middle income trap in the 1800s. And so, in essence, what you get is a point in history where people inherently have a less easy time getting out of middle income, but a really easy time getting into middle income. And this means that inherently there's less ability to completely move from one area of finance to another. And this is also why I very much am invested into countries that are prior to the middle income trap. Because let's say you're looking at Uzbekistan. Uzbekistan is still well within the middle income trap. They are still well within the factors of middle income economies. And as I've done theses around middle income countries, I've realized that a lot of them will continue to be flat. A lot of them will continue to truly not be able to become upper income or developed economies. The exceptions to these rules are Poland, Romania, places in the EU where they have an incentive to prop up these economies. But most trade blocs, for example, ASEAN or places like this, realistically don't tend to have large abilities or large incentives to become more than middle income economies. I'm currently here in Tbilisi, Georgia, where it is very easy to see why the middle income trap is happening. And it's because people don't think in terms of risk. And this isn't something that realistically will allow for the explosive growth seen in places like Japan, like South Korea, that got out of the middle income trap. And we're seeing largely that those two economies are stagnating. And so if you want to protect yourself against a stagnant economy and you're looking to diversify your wealth, you can feel free to contact me in the description down below. There's a Calendly link which you can get a 15-minute call one-on-one, absolutely free. If you like this video, feel free to like it. If you really like this video, feel free to share it with your friends. If you are looking for a way to join me in this journey of internationalization and globalization, feel free to subscribe. This has been the Traveling Report, signing off.